Lending to the agricultural sector in Nigeria has risen from 1.5% of total loans in 2009 to 3.5% this year. While lending to the real sector of the economy remains low, this growth reflects the impact of a series of programs by the Bankers Committee towards the economic development of sub-Saharan Africa's second largest economy. CNBC Africa's Wole Famurewa caught up with Central Bank Governor Sanusi Lamido after the committee's retreat this weekend and started by asking him about the key targets of the Bankers Committee in 2013.
Okay, well, if you remember going back 2009 when we had the first retreat, we identified three critical sectors, and these were power, agriculture, and transportation infrastructure. We haven't done much on transportation infrastructure, unfortunately, but there's been a lot of progress on agriculture. We are now talking about value chains and agricultural transformation plan. We have NERSL that has now been set up. And we hope that, and we've increased agricultural lending from 1.5% 2009 to over 3.5% of bank portfolios last year. And we are on course to meeting our target of 10% of bank lending by 2017. On the power side, in 2009, when we started, the power reforms had been suspended, they've been put on hold. The central bank played an advocacy role and the banking industry for kickstarting the power sector reforms. The central bank actually bankrolled BPE and financed the advisory work for privatization. That has been done. But having privatized, it's now time to face the whole big issue of the costs of fixing transmission and providing the financing. And so part of our target for this year is how do we convince the political authorities to dedicate, for example, all the revenues from the sale of power assets to fixing the transmission engine. We have a strategy that's been launched in October. We need to set up a financial inclusion secretariat in the central bank, and we need to set out proper work plans and timelines by the end of Q1, and also deal with competency issues. We have identified Borno State as a pilot state. We will do financial inclusion nationwide, but we would like to work with the government of Borno State and actually look at the three key excluded areas, because one of the most excluded states in the Federation, women in Borno, the poor in Borno, and the rural population in Borno. And we hope that in doing that, we can marry our financial objectives with developmental objectives and also political and security objectives, because at the heart of the security problems in the northeast are issues around the economy.
Right, but Governor, if we look at places like Kenya, there's success stories there with the likes of Equity Bank, and that's a bank that has focused on the poor and has been successful. There's a sense in Nigeria that the banks are not that focused on the poor.
Obviously, banks only operate within a framework of a wider political economy. And it is sad, but the fact that Nigeria is an all-rich rentier state means that the focus of government policy has never really been on the real economy. It's always been on the oil sector and on the kind of rent seeking that the elite can make. And therefore, there's been very little investment in the past few decades in those things that would empower the poor, not talk of making them financially viable. So there's little spending on infrastructure, little spending on agriculture, there's been little spending on power. And if people cannot even earn a living, how much do they have that will get into finance? That's one problem. We don't have the robust technology penetration that you have in Kenya. And usually you would have financial inclusion off the back of digital inclusion. We do have a Minister of Communication now who is very committed to digital inclusion and the whole rural infrastructure and penetration. We're working with her on how we can use the assets of, say, the Nigerian Post Office, NIPOST, as a backbone for digital and financial inclusion, and that will address some of those issues. Finally, I think we need to know that there is a question of financial literacy and consumer protection. And then the structure of the banking system. After consolidation in particular, we've created a number of large banks that make a lot of money just putting money in government bonds and lending to large multinational corporations, and they've therefore not focused on the poor. But Kenya is one model. The Moroccans, for example, are a very good model for housing finance. There are a number of African examples, and we have studied in this forum, we actually have looked at a number of what we call game changers in Africa. We looked at the commodities exchange in Ethiopia. We looked at the Southern Agricultural Growth Corridor of Tanzania. We looked at mobile payments in Kenya. We looked at housing finance in Morocco. So a part of this retreat is actually to benchmark the Nigerian banking industry against what's happening. We no longer have to go to China and Brazil and India and Russia to get models. We look at African countries and African economies that have done things that we can pick.
But Governor, I think a lot of people are expecting the banks to come together a lot more to fix things like technology and to fix things like improving financial literacy.
Precisely what this process does. That's what it's been doing. And before 2009, it never happened. Every bank worked on its own. Now you're talking about it was coming together that, for instance, forced the switches into interconnectivity. It was coming together that made ATMs and POSs to basically become interconnected. It was coming together that led to the cash holding model, to centralized cash processing and cash in transit companies. It was coming together that's leading to shared data centers and disaster recovery sites. It is coming together that's responsible for the success we've had on the power reforms and for the work we're going to do now in places like Maiduguri on financial inclusion and developing competencies on an industry-wide basis. There has been a tremendous amount of coming together in the last few years that never, in fact, I don't think there is any banking industry in the world where you have this kind of retreat, where the governor, the deputy governors, NDIC and the EDs of NDIC and all bank CEOs and discount CEOs basically lock themselves up on a weekend every year and basically brainstorm on how as an industry they can collaborate, okay, towards a common purpose. So this is I think one of the successes. I mean, obviously we're not perfect, and like I said, we have learned from other areas, but this is really one model and one process that is unique and innovative, and that really should be taken as a benchmark in the world.